Hello, everyone. I have an interesting topic for today. I want to hear you about what you think, Stephanie. It's about derivatives. And you know what? In the past decades, many emerging markets have been seeing massive derivatives losses based on a corporate's having activities. According to the data, total cost of non-financial fees of these derivatives losses about 300 billions. Around 50,000 firms in the last two economies has suffered these losses. One of the most recent cases happening in Korea with KitKat Ocean was hidden by these exotic derivatives with losses that hurt how many small enterprises as well as several large firms during the financial crisis in 2018, where the exchange is rated, speaking from the 915 to 5050. HIPTIN profile case reported, including the Win4net and a security solution company, would have to sell its headquarters buildings and sustain 5 billion won in losses from a snowball contract. Similar cases are also found in Syria, Salkan, India, and involves with products that have caused loss during adverse markets movement. Stephanie, I think that isn't a problem, a huge problem in the economy. What is your opinion about that?
I think as we analyze the product that is presented in the case, that is a local currency, is an innovative way to hedge risks, which is one of the uses of derivatives we present in the paperwork. Only by speculation of the market participants, the product could become abused or cause big loss. The balance between encouragement of innovation in products in the derivative markets and controlling abusive users of or over leverage on derivatives is something that it's always seen when trading with these financial instruments, and this balance is delicate and has always been difficult to maintain. That's why some people may say that excessive uses of derivatives could cause financial instability in a broader sense. When trading with currency, especially with local currency, which is the case of the case study, it always ends with the currency starts to depreciate. The loss, the loss on derivatives will cause pressure on local currency. This can create market panic due to lack of transparency for these derivatives. This always occurs, like I said, when you trade with local currency versus some other currency. This will boil down to a vicious cycle where further depressed currency values cause greater losses on derivatives. And I think the solution is that financial institutions should keep in mind that public interest is at stake with these transactions. Not only the government itself, but the whole public, since it's a local currency. Now, I want to know what my partner Juan thinks, if he agrees with me or if he has another opinion.
And I have another opinion, which is like we saw in the case, according to statistics, total cost to non-financial firms of these derivatives losses is around 530 billion, which from my point of view is a lot of money on losses. And not only that, due to that economic rupture, as I call it, around 50,000 firms suffered this crisis. So I personally think it is very important for everyone who invests in derivatives. I believe they all, firstly, they have to verify everything, including statistics, studies, news, and advice from professionals that might work as a tool for decision making to then make their next investment move. So um, once they make their investment move, they must keep an eye on the market day to day to update their investment movements and proceed with their next move, whether it is selling everything out or not. So that's what I think about it.
Oh, that is an incredible analysis for your part, Mr. Escolatico. I think you have a lot of of arguments with these discussions, but I think two facts are very important in this case was the time that was happening in 2019, 2015 was some similar crisis in this time. And what is the problem with the derivatives is that the derivatives are a bet. You need to be very sure that it's going to happen. And sometimes with currently now in 2020 with the pandemic, some problems that and anybody expected. You don't know what is going to happen you could have everything, but sometimes with the life but you can bet with this. And other opinion about that is that in the international investment testifies to this trend towards licensed products are centralized markets, although they still do not consider the over-counter that market that despite platform dedicate to swap processing are also saying increase that its activity at rate of 60% per year, as shown by Treneman Bloomberg. The use of these platforms carries into margin requirements that the capital that's deposited in this platform to support the transaction. As a conclusion, we need to understand that the bed of the problem of the derivative is the solution for that. And I think that what happened in India is asking about the time. The time is the conclusion of that. But something that is a pretty more secure that the derivatives is the venture capitals. And the venture capitals, I think they are very good to solve the risks, to solve some problems. And I think my friend Pedro is going to talk something about the venture capital. Give me your opinion about that.
Thank you, Eddie. Yes, I have a case here. I want you guys help me. A case of two is about qualitative factors in making venture capitals investment decisions. When, when startups requires large capital banking, can expect to seek out the venture capital. Understanding the process and priorities of the venture capital is necessary to gain funding approval on more than just a good business plan, like a positive revenue model or being likable person. This study gives a current view of the modern venture capitalists and the elements of their decision making for the edification of entrepreneurs in the founding stage. To understand and avoid of their presentation and spoken, these individuals have shared their experience in finding opportunities for high growth ventures. An explanation of venture capital's review is present, followed by a case study and summary of the commodities and contractions between interview and outcomes. Have you guys have any opinion, like Jose Miguel?
Yes, following what my partner Pedro was saying, there is many reasons to get into venture capital, but one of the main reasons why investors get into venture capital is to promote entrepreneurship. Nowhere else are you so close to starting of a business, unless you happen to be a founder. When an investor invests in a company at such an early stage, he or she experiences what he can have in his own company. In addition, you can find out what the business plan looks like, which components belong to it, or how to create a target group. The investor finds out which new technologies and future-oriented industries with growth potential are currently emerging, etc. Following what I said, my partner Franco is going to continue.
Yes, I want to say, in my opinion, that through the venture capital, one is at the heart of the entrepreneurship. Investments in venture capital promote entrepreneurship. Nowhere else are you so close to the starting of a business unless you happen to be the founder. When an investor invests in a company at such an early stage, he or she experiences what needs to be considered in his or her own company. Venture capital investments. Uh, do you see me? Do you see me now?
Yeah.
Okay, let me continue. Um, I was saying that venture capital investments in early stage offer opportunities for high returns, as low companies with growth potential as an alternative to low interest rate. They also have that portfolio companies that offer special conditions for investors, equity crowdfunding campaigns after entail investment premiums. The companies, the products are often offered to investors under special conditions that are frequently available only during financing rounds. And finally, you only know what everyone's talking about if you invest. So I want that my friend Pedro have the last words.
Thank you, Franco. Yes, I think, contrary to popular perceptions, venture capitals play only a minor role in funding basic innovations. I think venture capitals invest more than 10 billions in 1997, but only the 6% are or 600 million went to the startups. Where ventures money plays an important role is in the next stage of the innovation life cycle, the period in the company life when it begins to commercialize its innovations, when estimate that more than 80% of the money invested by venture capital goes to into building the infrastructure required to grow the business. In short, venture capitals is exciting field to work in. Aspiring individual needs to possess not only the necessary knowledge and skills, but also the right attitude to be a success. Thank you, guys. Have a nice day. Thank you.